What's going on, guys, and welcome on in. Happy Sunday night. So we're diving into some of the top stocks to watch for this coming week. We'll talk about how the overall market is doing. We'll talk about Bitcoin, talk some crypto, and of course we'll dive into kind of what we're looking at for this week. Do we see all-time highs in the overall market, which it seems like we're setting up for that. So we'll look at SPY, at least all-time highs in SPY. We'll look at the Nasdaq. We'll look at the Dow. We'll look at small caps because we definitely have a disconnect between small caps and the overall indices. Say the S&P, but small caps, we can see them bounce right back quickly. So they are something at least that we have to pay attention to, because I know a lot of people have been playing a lot more small caps lately, or at least people generally like to play more small caps because they have more growth potential, right? However, the past couple of months, it seems like it's been like the Apples, the Googles, the Microsofts, like the big name plays that have been big name companies that have been here for a long time, not going anywhere. And that's kind of been the safe haven, at least as of now, or at least as of late during this time. So that's what we're watching as we speak, though. VIX is coming down. We have small caps up the most across futures. We have tech up a little over 0.25%. Everything's up about 0.25%. Small caps up a little bit more than that, but that could change going into tomorrow morning. Any news headline, anything could drive these things right back on down. So just be cautious, or be at least aware of that. There's anything to be cautious about Sunday night, right? But be aware of that. It's just, just because you look at futures on, Sunday night at 7:30 doesn't mean that that's where they're going to finish. You're going to wake up at 7:30 in the morning and it's going to be the same thing. Probably not. Most likely not. So, all right, let's dive into the Webull account here, or at least the charts. Let me pull up all that stuff here in just one second. We'll look at Nvos. We'll look at some of the top stocks to watch here. I also want to look at let me pull it up. Open Insider. We'll see what companies, what like small caps, we see more insider buying. We can take a peek at some of that. We'll look into some of these. There have been some stocks I've been noticing more often than others, and OEG is one. So I definitely want to pull up OEG. Let's go to the big chart here for this. I wish I could make this a little bit easier to see in terms of the stocks and whatnot, but unfortunately, this is the biggest I can make the ticker symbol. So up in the top right, that's where the ticker will be. It's also like noted in a couple other, multiple other spots, but very, very small. And I'll try to kind of mention that at least when we talk about a stock. We'll talk about the name of the company, or at least the ticker symbol at a minimum. So if you kind of, at least if you can see that, great. If not, I know it's a little small. I mean, it's probably very small, especially if you're on mobile. But in videos, I can go back in, edit it, and add in the ticker symbol. So we'll see. Actually, I have Tesla pulled up on the screen right now, kind of consolidating. We kind of have a setup developing here. Tesla, it seems like every time this thing is dropped under 1,000, dip buyers come in and it gets bought right back up. So we'll see what happens on Tesla this week, but we kind of have some resistance here. We got to get back up over, looks like 1,100 or so on Tesla, and we'll see how this chart shapes up. I think we're going to see some more chop personally into the end of the year with Tesla, but we'll see. Obviously a great run the past 6 months or so. So we shall see. Nvda, yeah, we can pull up Nvda. Let's take a look at that. Nvda. It's actually a stock that I've been looking at, trying to play more like, play some more of these technical plays on the large caps, because technicals work, or at least right now. And always, things are always fluid, so you always, things are always changing. But right now, they're working really, really well. Technicals on small caps, not that great until there's a lot more volume. So we haven't been seeing the volume, and I don't expect to see too much until the end of the month and into next year. I think just because that's when you're going to see a lot more bigger money institutions maybe starting to kind of load back into some small caps, some of the speculative plays as we start the year off, and they're looking to kind of get off on the right foot. There's a lot of oversold things that all it really will take is some good volume, which ultimately, right, we're seeing retail is not, retail isn't the type of volume we used to see, right? Unless everyone can kind of focus on one stock, which we're not seeing at least as much. Retail, it doesn't have the power, the juice to bring up some of these small caps off the lows. So it just seems like there's just endless selling pressure. But Nvda, we have a key level up in here, up into like this 325 area. It's kind of a range from like 335 down to about like 310 is kind of the consolidation range. But roughly speaking, this has been kind of a key level that I've been watching. It's kind of bouncing off of this 325 and heading down. It's got some support here down under 300. So like 288 or so is an area that I'm watching. It did dip below that briefly was at Monday of last week, and then it got bought right back up and had a nice kind of day. But guess what? It went right back up into resistance and got rejected again the final 3 days of the week. So it's in a range for now, but until it gets back up over 325 and it starts to hold above that level, I kind of see this thing as, looking for a pullback. Maybe some dip buyers come in here just under 300. So that's kind of the range that I'm looking at. 50 SMA, that's down around 270. So this will be pulling up with time, but that's down around 270 at least for right now. Brtx, should we see a pump similar to PMCB then an offering? I mean, that's probably what you're going to see. Let's take a look at both those charts. Good evening from Connecticut. I mean, I used to live in Connecticut for like 18 years mostly, 18 to 20 years. Once I turned 18, I started going to school in Pennsylvania, but I was living in just south of Danbury like my entire life in Connecticut, if you guys are familiar with the area. Now we're in Austin, Texas. So, all right, BRTX. Let's take a look. All right, BRTX, bottomed out play, it seems like, right? Bottom. Let's look at the weekly chart here. And yeah, this thing is just absolutely bottomed out, it seems like. Okay, I don't know anything about the stock, though, just, for on the surface. But let's take a look. So, expect to pump PMCB. Let's take a look at this chart, see if we can make any comparisons here from these two charts. So this is a stock. These are a lot of these stocks. Look at this. This thing has kind of gotten crushed back down. But a lot of these things pop back up. They pump. They have these pump and dumps, as we say, right? For whatever reason, the charts are all like wonky here. But this thing popped up to 322. This thing hit down to 225 and it isn't really making too much move. But that's kind of what you should expect with a lot of these stocks. You kind of saw back here, and it looks like August. We had earnings report. Then it had a little pump right here, popped up to just about $10 and fell right back on down. Wouldn't be surprised. That's probably the offering came in. But yeah, it's kind of a cycle. It's, you see these stocks get beat down. News comes. When the news comes, they run up. They spike up. Sometimes, some stocks will run a lot more than others, depending upon the news, in the certain market conditions, how many other stocks have news that day, what's going on. Is the market super red that day? Are we seeing a lot of, algorithm buying, more algos kind of on? When we say algos, we're seeing that like stocks, are they ticking back up, or are we seeing a lot more volume on some of these intraday runners? A lot of that can affect how much a stock can run. And so there's really no way to know, beforehand. We can always look back to prior areas where it ran to, prior highs, support, resistance, all that good stuff. But there's really no way to know exactly how hard, a stock is going to run on a news release, or is it going to be a multi-day, or is it going to be a pop and drop, right? We've been seeing a lot more pop and drops lately, but multi-days are something that I've been noticing. We're starting to see a couple here and there, but that's kind of the general thing, right? Pump it up on some news, positive news, get people excited about the stock, drop an offering, boom, raise capital, pad your pockets, and the stock just goes right back on down, right? That's kind of the nature of the game we've been seeing, years and years and years. OEG is a stock that I did want to point out. Take a look at this. It's a stock that's made some pretty, obviously, had a crazy run last year, everything did, but from this point last year, right? Last year, this time, we're right around here. We're like 115. We're down around 272 right now. Had a crazy run from this time last year all the way through like early February. So it's kind of shown me a decent, reversal. It kind of had this little final flush down here. It fell down to 206 on Monday, looks like, and then pushed right back up and finished the week up into the upper twos. Now, this is the daily chart, so it looks pretty nice to me. And also, look at this little candle. Look at this close on Friday. By the way, look at this. We have a little increase in volume compared to the prior couple of days, and we have kind of a dip that got pushed down to about 250 and bought right back up, and it closed at the high of the day. Very, very good sign, at least bullish sign to me right there. And then if we go to the weekly chart, look at this. We have a bullish kind of engulfing pattern where you're looking at, what we mean by that is we have a candle that has from bottom to top completely covered and overtaken the prior week. So this past week completely overtakes the entire week we had the week before that, and closed above, which is good. So kind of your bullish engulfing, this to me could be that sign for that reversal. Also right around that 200 period simple moving average on the weekly chart. That's kind of your support right now. And also a prior area of resistance was up around 225. That's kind of acting as our support roughly for right now. That's a very bullish look to me. So not to mention, I also wanted to pull this up too. Not to mention, let's find OEG on this list. Take a look at this. OEG, the CEO has been buying in a decent a fairly large fashion, because if we take a look and we go back to, let's see where the CEO really started to buy. We saw some buys here into the fall. So really into the fall, like starting in like September, okay? He had owned about 600,000 shares of the stock at that point. So 600,000 shares, and now he owns almost 1.1 million shares. So he's almost doubled his amount of shares in a matter of like a couple months. That's pretty substantial. That's pretty substantial if you ask me. So that's what I'm looking at as some good insider buying activity behind the scenes on OEG. So kind of chart setting up. We have some fundamentals in terms of insider buying. It's kind of one way you can look at, I guess, fundamentally. We see that the insiders of the company who know more. And obviously, though, I also want to touch on this. The CEO, well, that is a good look because he's putting money in. If a CEO were someone's buying, and let's just say we go back to this right here, and he has 600,000 shares. If he's buying 10,000 shares, 5,000 shares, is that a big deal? No, because relatively speaking to how much money he already has invested in this company in shares, it's not that much. But he doubled his position over the past couple of months. That's pretty substantial. And you're talking about adding like 600,000 shares on a stock that's like $2.53 almost. You're talking about a lot of money, right? You're talking about over $1 million. Now, I don't know how much he makes, but that's a pretty substantial amount of cash, I would imagine, for this CEO, at least to some degree. So I think it's worth noting. But also, CEO, company's biggest cheerleader, they do generally make a lot more money. So when the CEOs are dumping money into these stocks, right, you have to take it with a grain of salt, because is that really a big deal for them? We don't know his financial situation right now, but let's say, right, he is someone who is only making a couple $100,000 a year from one of these companies, let's just say. That's a lot of money. So he's dumping this in, and he must really believe in the company. He must really believe what they have to bring in terms of the future that they have, growth-wise, all that stuff. And so he believes it's a good investment. Now, if you have someone who's making hundreds of thousands of dollars, millions of dollars a year as a CEO, and they're tossing in $1,000 or $5,000, $10,000, it's not as much, right? So that's kind of what you have to at least sometimes dive deeper and pay attention to. I haven't personally, gone deeper into seeing, if I can find anything more on James O'Neill, but it's something to at least note. Okay, so that's that. That's OEG. Let's see. Let me jump on into the comments and let's see. Greetings from Vancouver. Hope Lucid joins QQQ this week. Should boost. Yeah, let's see. Lucid had the offering last week at the private placement, I believe, or something along those lines. So Lucid's kind of in a weird spot. Obviously, let's go to the daily chart again. It's kind of at a key spot right in here. The mid-30s is kind of a key level. Also the 50 SMA. So I could see a bounce back up into the low 40s if the market stays fairly green. Although if not, I wouldn't be surprised if $30 is your next level of support to the downside for Lucid. So something to watch. If we hold up in the mid-30s and kind of recovering, that would be a good sign for the bulls. But I wouldn't also be surprised if we see down towards 30. The reason why now is because we're going into the end of the year. Be cautious because they're going to start to report, their delivery numbers in terms of did they meet their goals. And I believe their target was about 520 vehicles or something along those lines for 2021. I don't know if they're going to hit that, right? If I had to, from all information that I have seen, it looks like they're going to come in shy. But again, that who knows? That could change. So it's something to watch in terms of Lucid. That's the downside draw there. Let's see, SNDL. SNDL has been weird. Let's take a look at how this one's setting up. Let's see. It's gotten beaten down again. SNDL is kind of in a weird spot. If we kind of zoom into this thing on the chart, let's see if I can zoom in a little better. Okay, so it hit down to 53, bounced back. Perfect example here in SNDL. Okay, prior area of support, we had this level right here, which was about 64 cents or so, 64-ish, 65. That was your prior support that it was kind of holding up, bounced really nicely off that level, and then guess what? It dipped below, and it tried to bounce back, and where did it get rejected? Right at that 64. So that 64 is a key level on SNDL. It needs to get above that and hold above for that to kind of regain some strength. Personally, if you're looking for a cannabis plays, MSOS is my cannabis play of choice. Why? It's because this is the ETF, I believe. This is the ETF that owns a lot of the OTC U.S. companies. So a lot of these U.S. companies are not actually listed on the major exchanges. And so what happens is when you see, positive cannabis related news or whatever, everyone dives into the Canadian companies like the Tilrays, the SNDLs, and whatnot, right? Meanwhile, these are actually going to be longer term, the better performing companies. And this recent volume spike in November, December really kind of catches my eye. Even though this has been downtrending, we could be potentially bottoming out here around $25 per share on MSOS. And so this is, I think it's an ETF that owns a bunch of those companies, right? So you're getting exposure to a lot of those US-based OTC companies without having to, you could also just go to the OTC and buy those individual stocks. You could just look up what MSOS holds and just buy those stocks if you wanted to. But if you don't have access to OTC trading or you don't want to do that, you can just buy this and you kind of get exposure to all of that. And you don't have to worry too much. Personally, I don't know if necessarily right now, if we can see it, we can always go lower, right? But I think longer term, this is something that I would probably be looking to stash away in like a longer term portfolio and not really think about too much, because this should probably pay off quite nice in the coming, 3 to 5 year time span. We'll see. But I would imagine with potential federal legalization at some point in the US in the next, 5 years, let's say, I would imagine these companies, especially if they get uplisted to the major exchanges, that's where a lot of the money is going to flow. It's going to flow out of these Canadian companies and it's going to flow into the US companies that have been kind of, I don't want to say neglected, but they haven't been found in a sense. There hasn't been enough money flow to those companies because they're in the OTC. So we'll see. Let's see. CLSK. I want to look at Bitcoin too. CLSK, Clean Spark. How is it shaping on up? So this thing had a nice recovery here since September. Bounced from here, looks like $11 a share, up to about 100% move, up to about 23, over 100% move, right? Now it's right back on down to a kind of a level that it held up decently last time. It's going to be a pretty wide band just to get a broad view of this. But here's kind of like what I'm looking at right there. So prior resistance back in 2020 became kind of new support as we dipped down to that level. And now we bounced back up and now we're back into that range. So I kind of like maybe picking up some shares of Clean Spark. Don't want to see it really going below like 11, but picking up some shares here may not be a terrible idea on Clean Spark. JKS. Jinko Solar, I believe. Yep, this has been one that's been kind of trading in a range. It has come down over recent weeks, but maybe this is your opportunity to pick. A lot of stocks, a lot of charts have this look. A lot of stocks and a lot of charts have that same look right now, where they are coming off a really hard pullback, somewhat of a bounce, and now they're kind of pulling back again. So that also brings me over to IW. I want to pull this up really quick. This is small caps, the Russell 2000. Here's kind of the range, or the range we've been in, right? From the low 200s up to about 235 to 245, roughly we hit a couple weeks back, and then sell off, boom, hard. And now we kind of dipped down to this range again, got bought back up. Resistance here about 226.50 resistance, and there's a gap up here to about 228.50. So that's kind of a key area that I'm watching on IWM. And also I want to pull up SPY. This is looking at small caps. Now let's look at the overall S&P. So SPY looks extremely poised for a all-time high push right here, because look at this. Look at how it closed up on Friday. It closed up very, very strong towards the high of the day after dipping down earlier in the day. And, pretty much up towards the upper resistance point that we've been seeing over the past couple of weeks around this low 470s. And all-time highs would be 473.55, it looks like on SPY specifically. So that one should be it should make a shot to all-time highs. I wouldn't be surprised, again, if we go back here to the futures, they're up even more now. Here's the S&P up over 0.25%. This would probably send us there into tomorrow. So we'll see, but that's kind of what we're expecting potentially going into tomorrow. Now, it's always possible you can see a day where you gap up, hit all-time highs, and then sell off the rest of the day. It's kind of what we saw here when we hit the last all-time high on SPY on the 22nd of November. So something to watch for tomorrow, but we shall see. Currently, I don't have any SPY. I have an IWM call for 2023, but I don't have any SPY. I don't have any SPY calls. I've been playing a little bit. I had like last weekend, I played some SPY calls and we had a nice little recovery, which was great, but that's really that. Tesla under 1,000. It's been, decent support around in the mid 9s, but 900's got a pretty good support. So I would expect, if we see more weakness on Tesla, I would expect $900, kind of this range down here, to be the next possible, bounce point. But we shall see. We shall see. NNDM is another interesting one. I haven't talked about NNDM, I feel like, in a while. Yeah, this thing is it keeps going down. We're seeing a lot of these things. NNDM, I forget how much ARK has. ARK has a lot, if I recall. Actually, I can pull that up. I have that pulled up somewhere. Here we go, lucidtracking.com. Let's see if I can pull up NNDM and see what ARK's been getting destroyed. Okay, so you guys know Kathy Wood and the ARK, her ARK funds and whatever, they've been getting crushed as of late. So let's see if we can pull up NNDM here. Talks about some recent buys, daily buys and whatnot, but I am more so interested in NNDM. Let's pull it up. Okay, so past 8-day snapshot, they got about, in ARKQ, they got about 9.1 million shares. That actually is down from about a couple days ago. And same thing here in ARKW. They also are, so it seems like they're kind of offloading a little bit just because maybe that's too much of a weight for some of these funds. So yeah, the weight has been coming down, at least in ARKQ. The weight of NNDM has been coming down. I'm kind of interested to see when this thing, or if it wants, it had such a crazy run. It really did it. It's a perfect example of a momentum-based play. It had such good momentum. Every dip kind of started to pull back, but it never pulled back too much and got right back and bought up. And then we eventually double topped here at like 1780 and have pulled down pretty rapidly since. But we shall see though. It's getting down to a point where, you know, relatively speaking, compared to where it was, not saying this is where it should be valued at, but I'm saying compared to where it was, it's getting quite low compared to where it was this time, or at least going into this time last year. We're roughly around the same. Well, we're lower than this time last year on that, but we did dip down to about $6 or so on the dip in mid-December. So we shall see. FLNT, I had this on my watch list a while. It's been on my watch list for a little bit. I personally missed grabbing this thing in the ones. I kind of wanted to, but now look, it's a perfect example of what you kind of want to see. And I think we're going to see a lot of stocks that do this exact same thing, where you see these kind of really hard pullbacks. You know, and these are, I don't know exactly the details upon Flint specifically. It's on my list. Before I actually take a position, I dive a little bit deeper into it. So I'm not super familiar yet because I haven't taken a position. But we had this sell-off. It hit up to 275, and then it sold off down to 169. Pretty big sell-off right there. Volume increased. Seems like those dips got bought up pretty quick, because then within like 2 weeks, this thing went from like the 160s, 170 area back up into the low 2s, 225. Now it's at 231. It had a little crazy wick on Friday, but it held $2, and now it's holding up around 225, which was the prior area to kind of watch as support. So if it can hold up here in the low 2s, I like that as a play. Maybe, you know, you stop loss under $2, so you're going to risk yourself 30 cents for maybe a move. I would be targeting up towards that 200 SMA, which would be up in here towards 3 right now. That'll be coming down a little bit, but that could be a really good move where you risk 30 cents for, you know, making 60 plus is kind of the idea. In this case, maybe it's like 70 cents. So I like that. Chart doesn't seem too terrible, you know, if it can hold up around this level. Let's see. MIC. Let's pull up MIC. I have no idea. I've never seen this stock before. Seems like we got something going on here. What's been happening in the past, let's look at the past couple of days. Just going to trading in a range, right? Roughly from like 360, 350s. I don't know. I don't know the details of this company by any means. TIVC. It's one of those recent IPOs, right? So this thing is kind of, personally, if this thing comes back down into like, let's see, where's the market cap? Market cap is 40 mil. Yeah, I mean, this is one of those like lower float IPOs, I'd imagine, right? So they've been running, some of them have been running. They dipped down to 330s, pushed up to 5. Now it's pulling back. It kind of got rejected up towards 5. So we're kind of trending, at least trending down for now. If it comes back down to the 3s, that could be an interesting spot. Personally, I'm not a huge fan of buying these things, like unless you're buying them like absolutely on like some hard sell-offs. I don't want to say it's super risky, but it's also kind of like, you know, a lot of this is kind of random. You're kind of hoping for them to get picked up. You're hoping for some good news to drop, and you're hoping for that low float to kind of be attractive to traders who want to trade this thing up to 10, 15, $20, whatever. One of the ones that I have recent IPO wise is a similar situation, I think, is Beat. Heartbeam is the company, ticker symbol BEAT. same thing, right? Open IPO'd way higher, it dipped down to 3s, and then it had one day where it was up like 35%, and now it's kind of slowly fading back off. And I'm looking to see if I can pick something up on this as a speculative play, looking for a move to $5 plus. Again, we'll see. Something like that is kind of the idea. But same idea behind that one too. Could SVXY hit 6? It certainly could. If the market goes back to all-time highs, this thing looks, poised for a gap fill up here towards 60, 61. And then I wouldn't be surprised if we get back up to hitting, highs again, or at least recent highs on SVXY. You just need to see things really stabilize and really kind of steady out. I think there's a little bit of fear still in terms of some of these dips. We'll see. This week will be pretty telling. If the market goes to all-time highs this week and stays up and has a nice strong week, this will be back up in the 60s easily, very, very easily. I personally sold mine. I had a couple calls out to, I think, next week. I sold them all this past week because I got a pretty good move, but I sold them still early, I think. And I think we can still get a bigger move. I probably should have held some for the bigger move, but it is what it is. I took the profits and I moved on. It was a solid gain, so I couldn't really complain about that. Let's see. SoFi going to hit 12. Let's see. I would love to see SoFi come down more, personally. I would love to buy more of it. But SoFi, you had this kind of in this range right here. Support we're seeing right now is like down here. Under 15 down to about 13.50 has been really good support, but we could see this thing down. The next levels after that would be down towards like $12. Yeah, so if we do drop below this 13.50, I think $12 is not out of the cards on SoFi. So that's kind of what I'm leaving. I'm leaving something to add to, or not some. I'm leaving out. I bought some calls out to 2023, so like I'm leaving myself some time for sure. But I've also left that. I added a super small position, so I want to buy more of that ultimately. It's my thought process. ARK also buying MTLS. It's always fun to look at some of these like smaller market cap plays. Look at this. This is an interesting one. MTLS. Look at this. This is a stock that's gotten destroyed, right? Hit 87 back in early this year. Got absolutely destroyed. Found some support here at around 1850 was the lows that we hit, right? So it's trying, now it's at 23. Yeah, there's decent range on it, but it's trying to curl. It's making that kind of U-shape type of look. It has that look. If we can keep making higher lows, stay up over 21, it looks like that was the recent low right there, 21. If you stay over 21 and start to kind of round this corner and push up over 27, that was the prior highs, or at least the highs from early November, 27. And this thing can make a little move. This looks like it's a slower mover. It's not going to happen overnight, but I like that chart. Look, the momentum seems to be, or at least it looks like it seems like we want to start getting buyers to come back into play here, just chart wise. Let's see, DQ. Pull her up. This thing has come down. Look at this. I'm seeing right off the bat. Here's my consolidation range that I'd be looking at from last year, right? This similar time last year. We're into that range. So I wouldn't want to see this thing under 35, but this I would imagine is a good bounce zone idea on DQ. I don't know anything about the company fundamentally, but just chart wise, it doesn't look like a terrible spot. NSPR and Nvos selling points according to TA. Let's take a look. NSPR, I'm waiting for some news, waiting for a spike. So same thing with Nvos, two my kind of like small cap plays that I just kind of I'm just playing them for the spike. I'm not going to hold those things after a spike. So I'm looking at this one, NSPR. I kind of like this thing to hit the 200 SMA is a great target, which is like 550. So I kind of have a target there. If not, this has gotten rejected up into the upper floors every time. So anything up over 450, I will certainly sell something. And then ultimately, I'm looking for a bigger move, kind of up over 5, right, for the 200 SMA. And then after that, targets I would have would be up around 6 to 650. And then this spike right here is 680. So I would say up in that 5 to 7 range is what I'm looking at ultimately on a spike is what I want to see. But we shall see. They got tons of cash. I don't want to say it's any small cap is a safe investment, but it's like 28 million market cap. Any positive news can catapult this thing 100%. And we've seen it happen all the time. It's a tiny float as well. Nbos, same idea. This one, I'm not really sure, to be honest, exactly price target. Let's take a look at this thing. They should be reporting their 10K, or they should be reporting those earnings, I believe, very, very soon, because they are due, or they at least said by the 14th they're going to have that. So that's coming up this week. this has gotten rejected up into the, upper two. Well, actually right here, there's a spike up to about $3. I honestly think $3 is very doable. 200 SMA first though, which is around 225 for right now. And then we should see from there. I think we can certainly see three plus, but it depends. This is also a stock that you can't even buy, I don't think, on TD Ameritrade. So it's kind of been like restricted in a sense from that. So super low volume, but the volume is picked up on this recent dip for sure. So we could be seeing some loading going on, and I think that's certainly what we're going to be seeing. But I'm giving this one some time, patience on it. No, really. To be honest, the way I like to play my small caps is I know what I'm buying. I'm not buying just like some random Chinese companies that have no revenues and they're going downhill. That'll just be dilution machines. Ultimately, I'm trying to buy stuff that has more cash, lower threat for offerings, decent fundamentals, relatively speaking. Obviously, small caps, there's always the risk, right? And in risk-off periods of time, which is kind of what we're in right now, no one wants to buy small caps. You're going to see the weakness, and you're going to see it. But you always get these spikes, and you kind of see the same thing, I think, on like VISL, a stock that I also think is fundamentally undervalued where it's at right now, personally. But again, right, that's just also doesn't matter. The market's going to do what the market wants to do. But again, these stocks are going to have these spikes. You can be looking at stocks that are ultimately downtrending, and you can do very, very well. I grew my account from like a couple $100, like I don't know how many hundreds of percent, right, in a couple of years or like 2 years from like a couple $100 to, whatever it is now. This Webull account, it's documented too on the channel from like the past 2 years, literally playing downtrending plays, but playing for the spike. So playing for catalysts, playing stocks that have lower threat for offerings. We're playing for literally the spike and get out. And it's like, you don't necessarily need to worry like too much about trying to catch things. Ultimately, it's great if you catch something like an uptrend that has momentum behind it, like VISL or a lot of stocks really at end of last year into this year, great. But there's still strategy behind playing stuff and buying the 52-week lows and buying those new lows, because if you're buying these low floats at the lows and these companies are not necessarily like absolute trash, and they're starting to get to a point where like the market cap, their revenues, their cash position doesn't really make sense to their valuation right now compared to other stocks, same sector, they're due, and many times they do get these spikes, especially when their insiders are buying, especially when you start seeing hedge funds and bigger money is coming in. What are you going to do? At some point, they're going to let this big money out of the trade or out of the stock, and they're going to run it. And they're going to run it 25, 35, 50+% sometimes, which is what you kind of see. VISL, random day, right? This thing was downtrending for months, had a random day where it goes from 150 to 250, just like that. I mean, that's a massive, for somebody who, even if you had an average up over 2, you're still able to sell some of your position, and then you can rebuy these things. 60% move in one day. I mean, that's the type of stuff that you're looking at. Across small cap land. I think we'll probably get another one of those very, very soon. We're coming down to a spot where this thing is getting to like super, super low levels. So personally, I'm a fan of buying it if it comes down even further. Under 125, I think is a really good deal personally. We'll see. All right, let's see. Let's see. Fed's tapering effect. I think it's going to, I wouldn't think it crashed the market because it's too, you would think yes. I don't think it's going to crash. I just really don't think it's going to crash the market. I personally think we can probably see it next year up here. And as of now, there seems like there's no sign of stopping. But I wouldn't be surprised if we kind of have maybe a 10% year next year on the S&P. I just don't see another 25% year or whatever the hell this year is. Crazy, right? But I think a 10% year is much calmer, right? And we're kind of seeing that, let's be honest. I mean, it's not the best kind of visual, but we had kind of an aggressive bounce. So the slope of this kind of rebound, right, is aggressive. And then this slope that we kind of have seen, I'll just draw this line right here, this trend line. This has kind of been your resistance, right? And I can draw a couple of these lines in here too. Kind of been your resistance point, on some of these trends. But as of late, right, this slope has come down. So look at the recent slope. So we kind of had this trend right here where you had a slope of like, what was this? Like a 27-degree, I guess, angle, if you want to call it that, whatever. Now you're talking about an angle of 21-degree angle. So you're seeing how it's coming down. It's not as elevated of a move. So I think we're going to kind of maybe even see a period of time where eventually this next slope maybe goes like this. And so you can see the clear kind of slowdown of the move to the upside. And that's kind of what I'm expecting into next year. But just because I expect that doesn't mean it's going to happen. I think if we see the more we see this thing just go straight up if that's what happens this week. The more we see that, the more that I think that the great hedge is Uvxy. And every time we get up into all-time highs and we start feeling really good, and let's say you hit all-time highs and you have a really good week where the market stays pretty good, pretty strong, it might not be a terrible idea to start looking into buying some Uvxy to hedge yourself for volatility, because you're probably going to see some of these, very hard volatile times where everything comes down. Really, overall market, here didn't come down that much, but it was panic. It was panic central. And then, Uvxy, let's pull up Uvxy. Obviously it's coming down now, but Uvxy had a field day, and the thing went from, hitting lows of 14.26 to, you probably could have got this thing under $15 past couple of weeks. Let's go to like a 1 hour chart here. You could have got this thing, even in the 15s, right? It's still fine. And the thing went from 15s to 26. So a 70% move in Uvxy. Ultimately, right, you could play that a couple ways. I personally, what I would probably do to hedge myself is buy some calls. So let's say like we're sitting around, let's say Uvxy in the next like month or two, no volatility, market kind of, but there'll be some volatility, market kind of stays pretty nice, strong, whatever. And Uvxy bleeds out. The thing goes down to like, 11s, 10s or something like that. Then it's probably time to start picking something up for the next spike and literally just buy some calls out for like a month or two, buy some calls around where we're at, around that $11 or $10 strike. If we're down there, ultimately, maybe we're down at like 12 or 13, I don't know. And buy some calls around that level, and they can easily double in on a move like this. If you're paying a couple bucks for those calls, or a dollar, or even, who knows, whatever you're paying for them, they could double on a quick spike in volatility, and you're out for, 100% gains, and you hedge your downside. So that'll be the play there pretty much until we start to kind of really calm down, or we have a downtrend, or we have more of a consolidation. But for now, it doesn't seem like that's what we want to do, right? Let's see if we can pull up the Dow. Here's the Dow. Here's the Dao Etf. Pull up the daily chart on the Dow. DIA. This is modeling Dow. Very similar chart to SPY, at least how it finished last week. Kind of had this is what you see too when you have a volatile period of time. Very volatile period of time, past like week and a half, 2 weeks, right? What you saw was a very nice strong bounce back Monday, Tuesday. And then Wednesday, Thursday, Friday, what do? We didn't make much of a move compared to the prior 2 days. We kind of flatlined. What was it allowing? It allowed for just the time decay, the theta decay on a lot of option contracts. Everybody was buying options after the big bounce back. Oh, great. Now my stocks are going to bounce back this much. And then all of a sudden, guess what? The rest of the week, they just sit. They don't move. And that's exactly how you get burned with the options. So you got to at least be wary of that. I think, personally, for me, like the option plays, playing an option, Monday, Tuesday, Wednesday is better than playing something on Thursday, Friday. That's already had a big move that week. Personally, it's just something that I would be cautious of, even though you may think this thing is oversold. Maybe buy it an extra week, right? If you're playing the opposite, the reversal, buy an extra week in case we do have that theta decay and they just sit still and nothing happens, right? Because I've seen it too many times. Okay. ZNGA. Pull up this stock right here. Here's the weekly chart coming down to kind of an area of consolidation from this. Let's take a look at this. Kind of an area of interest to me, right? Came down to this level last. This is actually back in 2019. This is looking at the weekly chart right here. So this is 2019. So we had some support around this about 550 to 650 range. So we're kind of in that. Below 550, this thing could come down, I think, a decent amount more, down to some of these highs, down to the 450. So 550 could be a stop loss point on ZNGA. And then this could be setting up for another bounce. I'm not sure fundamentally what's going on here, but this could be setting up for a bounce from this level. I wouldn't be surprised. FAMI is an interesting one. End of the year, right? You generally see a lot of these super, cheap penny stocks getting bought up. So I'm interested in this one. This is kind of, if we start to see some confirmation behind anything, any of these, all of a sudden, you notice a stock that's like a 40-cent stock goes to like $1 for like almost no reason. Maybe there's a decent press release and they send it, but the press release, in the past couple of weeks wouldn't have sent it, but all of a sudden it just does. That's kind of the signal for me to start thinking about playing something like this. I don't want to say, I don't like the term lottery because people always say, yeah, it's a lottery. I'll buy lottery calls. I'll buy lottery puts. I'll buy a lottery position. Personally, the more I think about it lately, I don't like that terminology because you're essentially saying this is a low probability trade. Why would you put your money in something that is a low probability trade. I'd rather just put my money into something that I have a higher confidence in, or have a proven track record in, or something along those lines, right? So personally, not a huge fan, but a small position I may be looking to take in Family right here or something like that, because there's a lot of other ones out there that are similar, beaten down, cheap pennies. And from a balance perspective, looking at this thing from where it's at right now, I could see it go back to 50 cents. I mean, that's realistically, compared to the past couple months, a move to 50 cents is 100% from where we're at, but it's not that unrealistic of a move, and 100% is awesome. So I'm kind of seeing that, especially into the end of December, is generally when you see a lot of these cheap stocks go crazy, and then into early next year, into early January, just historically, small cap land, that's what you see. It seems like this year isn't kind of matching up perfectly with historical, records and whatever, but we'll see. That could change this week. It could change fast. And I was looking back to at least my portfolio performance from last year. Everything really January alone. I can't even imagine. I mean, obviously January is a crazy month, but in 1 month, right, the amount of moves, things can change fast. So just at least be ready for that. If we do see a shift into all of a sudden, there's a clear theme of like super cheap penny stocks that are like bottomed out, start running, then that theme, you want to catch on it early, and there's a lot of money to be made on. Even if you miss the first one or two, there's the third, the fourth, there's a lot where that came from, especially nowadays, a ton of stocks under $1. This time last year, or at least I'd say about 10 months ago, there was like literally a time when there was like 0 stocks, or maybe 5 stocks under $1 on the big boards, right? That means we're talking the NASDAQ, the New York stock. There was like nothing. I'm not talking OTC. So we shall see. How do you know if a stock is a threat for an offering? Well, there's a lot of ways. Honestly, there's a lot of ways to look at that. So you could look at, first off, BAM SEC, and you could go to, let's see, BAM SEC, for example. Let's see, what's a stock that I know has one? I know there's a couple. I want to say Cobbs has, not Cobbs, Mark. I believe Mark has one. You'll see an S3, a shelf registration. So they're registering a shelf offering. If you see a registered shelf offering and then look at the date, and then you can go back through their latest press releases or their latest 8K filings. And if you see that they have not tapped into that shelf offering, which they will then tell you if they do, they'll say, hey, we have done an offering, or we're doing this, or we're doing that. And then it'll say, according to the shelf registration from this date, boom. If they haven't tapped into it, there's the threat. Also, look at their past. Are they a company that has done offerings in the past? Okay, interesting. How much? Look at their balance sheet, right? Look at their latest earnings report, also on BAM SEC for free. Look at their latest Q3 earnings. How much cash they have? How much cash are they burning? Like, how much did they use? What's their cash burn rate? And so if they have, let's say, $10 million, and every quarter they're going through $6 or $7 or $8 million on average, right? Well, you may think, okay, they got $10 million at the end of the last earnings. If all things are staying the same here, they're going to need to raise some money in a couple months. So then that kind of starts to get you thinking. There's a lot of ways, but this is probably one of the best. Seeing a shelf registration on file, and then on top of that, just diving into, okay, are they strapped for cash or not? And if they are strapped for cash, there's always that risk, and you got to be careful of that, right? So that's why I like, personally, when I swing my small caps, I look for the stocks that have more cash for that reason. And less of a history for the offerings. And sometimes they'll even say in their recent earnings reports, or the CEO will have a letter and they'll say, hey, we're not doing any offerings, or we have cash to fund ourselves through X number of months or X number of quarters, and then you can kind of back your way into an idea behind a trade there. So personally, that's that idea. Let's see. DraftKings versus Penn, DKNG buy now, or here's the thing. I personally think that both of them are great buys right now. If you're not worried about the time. So let's go DKNG. Let's see, DKNG. Why is it not playing? There it is. I'll go to the weekly charts because the weeklies are a little easier to see. So we saw the bounce. So really nice double bottom right here at 27.50. So that's kind of your key level. If DraftKings pulls under 27, it's probably coming down into like 20, maybe 25 psychological. But I would imagine it comes down to about $20. I would not be surprised. So just be careful of that. But on the weekly chart here, double bottom right at the same point. I like that a lot. That's a good sign for me. So I like DraftKings at this level right now, under $30. I think is a great longer term play. And then Penn, Similar idea, similar ideas. These are two stocks that the hype of the sector in sports betting was like super strong last year. And I understand, great, cool, whatever. They got to pull back, and they have pulled back. They have certainly pulled back, and they needed to. They really did. But now we're getting to a point on Penn where also similar setup, it kind of double bottomed here, like $47 or so per share. Below that, if it comes down below that, I wouldn't be surprised if Penn comes down into like the upper 30s. So just be careful of that. But same thing with DraftKings. There's similar plays. My speculation is that if they're going to pull that move down, it's going to happen the next 2 weeks. If they don't do that in the next 2 weeks, then I think they're probably bottomed for now. We'll see how the overall market is, sentiment, how the next couple earnings go for these companies. But I would imagine that they're getting down to some pretty low levels. Personally, I like Penn longer term. I have some 2023 calls. I'm looking for a move back up into this $70 to $100 range. I think we can certainly see back up into this $100 range. It just might take a while. So we shall see. Personally, I just think the Barstool play here with Penn, the growth, and then longevity-wise, more and more states legalizing this stuff. I think there's a lot of money to be made here. My thing about Penn compared to DraftKings, if you look at them fundamentally, right, I would say that DraftKings is probably the safer company because DraftKings, that they get some bigger deals with, like, I think the NBA. They have a higher percentage chance of getting a deal with the NFL or the NBA or these different kind of organizations, right, that have a certain brand image. Penn, on the other hand, Barstool, definitely doesn't have that. They have a different image, right? You guys know what I'm talking about? Now, they don't care. They're playing and they're saying, we don't want to be pretty. We don't want to be like, super political. Not that they're not saying political, but they don't want to be like super nice and kind of put on a fake smile and do whatever, and just kind of generalizing. So there's the risk there, but a lot of people love that. A lot of people love Barstool. A lot of people love all the stuff that they do. So you kind of have the cult following of Barstool, potential for that and the growth that's seeing, versus the DraftKings safer, like they actually could get the bigger deals with some of the big organizations because they're not as polarizing as a Barstool. So you kind of have both sides. I like both. I like the Penn for the potential, speculative potential for some crazy growth, some great numbers in the coming years. And I like the DraftKings for kind of the safer, play that industry, play the company, growth type of play. That's how I see both of them. So if that makes any sense. Powell Wednesday could ruin everything. Yeah, sure. It sure could. It sure could. Check. Let's take a look at Check. Check got destroyed recently. Right now it's down into this level. I kind of like it down around $25. If I can kind of hold 25, I kind of like it down here. You have to be, let's draw some lines. Let's draw a little line right here. I'm pulling up the weekly charts because I like to kind of broaden things out, at least a little bit bigger. That's what I've been liking to do lately because I honestly have the dailies sometimes. It's great, but I'm looking at bigger picture right now. A lot of things have been beaten down. So Chegg is one that I think could be, if longevity wise, I don't know if that's necessarily going away personally. So I think this could be a nice bounce back in the coming months, years. I kind of like that play. STNE. Same similar chart. Look at how much volume though the past like 4 weeks on this thing. So it bottomed at 14, hit those new lows, and then now it's trying to potentially kind of bounce here around this 14. So you can kind of play STNE as that 14 support. So risk a couple dollars down, but this is, we're talking about range on this thing. You could be back up to $30 in no time. So you're talking about from where we are right now back up to 30. That's only putting you right here. And that's a 70% move, right? So you got a pretty big bounce back, risk yourself from right here. If you're going to risk it to 14, you're going to risk yourself about 20% to make 70%. It's not a terrible idea for a trade. Now, it's just, obviously the scale is different. Maybe you're not risking 2 to make 5, or risking 10 to make 20 or 30. You're risking 20 to make 70. So just as long as you understand the range of these stocks, then you can build out a plan that would fit that type of range and fit that type of movement just fine. Let's see, major indices all-time highs. Yes, that's the thing. So what happens if we see a pullback on the S&P while major indices? That's been the concern. That's been the cause for concern. The way that I see that is, yes, it's going to pull things down, right? Generally speaking, if we see a much bigger correction, pullback, whatever you want to see, and that's literally what we just saw, right? So we saw a lot of these things, a lot of the small caps have been getting beat down and hitting new lows or relatively close to new lows. And the recent pullback in SPY, let's go to the daily chart here, like 2 weeks ago, when it pulled back pretty hard and got volatile, when it pulled from the 470s down to the 450s and dipped just below for like 1 day, it pulled a lot of these small caps down to new lows, new lows, new lows. I think personally there's a lot more going on. Generally speaking, like pre-pandemic time, you would see somewhat of a correlation between more interest, more volume in small cap land compared to like when we're seeing a pullback or a slowdown in the market. So you kind of need to see a slowdown in the S&P or the Dow or the NASDAQ, or not sharp pullbacks. You want to see, I'm talking about like more of like a sustained kind of like something like this, or a sustained kind of chop. As that develops, the first couple weeks, the first couple days of seeing that, it's going to be obviously choppy and you'll probably see some pullbacks in small caps. But then when it starts to go, okay, now it seems like the fun is over for the overall market. Where are people going to make money? That's when you'll start seeing the big money shift into small caps more, because there will be less volatility in the large caps. So go to the small caps, go where the volatility is, and that's where we'll start to see more volume. That's kind of the speculation. That's what I imagine. Although hard pullbacks in the overall market, pretty much everything gets hit. So you have to be, when you're playing small caps, you have to understand that, especially if you're swing trading them. Just the swing trade market for small caps hasn't been good. It just really hasn't. It used to be, I will say, it used to be pre-pandemic. It was a lot of fun. I had a lot of fun playing these things, like buying these things as they were hitting new lows, doing a little due diligence, understanding the catalyst at play, get the spike, take profits, get out, move on to the next one. It was just like rinse and repeat. It was awesome for some time. But again, the market was also generally strong. So will that change when a weaker market hits? I don't know. Let's see. SPX, I think hit all-time highs, right? I believe. SPY. Where's what's the ETF that's like the 3x SPY? I forget what it is, but I thought it was SPX. Whatever. Okay, let's go on to the next one. Powell can impact whatever. He can impact anything he wants. The nature of penny stocks that I play is I'm playing stuff that's already bottomed out, playing stuff that's at supports or it's low or whatever, and I'm playing them for the spike. It's literally what it is. So they always, I don't want to say they always spike. They don't always go. As we're seeing the past couple months, they haven't been, right. But we've been seeing a period of time where things have gotten beaten down so much. Eventually you're going to see money flow back into these things, because it has nothing to do with the overall market or Powell. It has to do with everything to do with big money. It has everything to do with the funds, everything to do with the algorithms. Where will the money be when all this stuff is beaten down so much? These algorithms made so much money, these hedge funds have made so much money on the way back down. When it comes to a point of like, okay, now everything is like super oversold, or this specific stock is super oversold, well, flip the switch and you can make just as much and much more on the way back up. So it's planned. It just comes and goes in cycles. In a bull market, for certain stocks, there's bear markets for other stocks. Like for different sectors, it's not always going to be like, oh, if the markets are up, everything is up. Not necessarily, right? You'll have times when the overall market, the S&P is down. There were times where I would say pre-pandemic is mostly when I was noticing this. I had literally I never would care about SPY. Never cared about SPY at all. Didn't care. It really I only started caring when we had the crazy crash, pandemic crash, whenever in early 2020. That's when obviously everything got hit, right? To a big degree. So I noticed that. But even beyond that, right? I've been paying attention to SPY because it seems like everything kind of correlates. But prior to that time, prior to 2020, that wasn't as much the case. It was. But I never worried about SPY. I just did my thing and played my small caps, and that was it. Kind of canceled the noise out. I think sometimes you get caught up in a lot of noise, and some of the noise is nothing to do with your strategy, nothing to do with your style, so why pay attention to it, right? But again, there's been a lot of changes. The market's different, and you kind of have to see that and adapt to it, obviously. PLTR. DPW. They changed their name, I think, or they're about to, or whatever. Let's go to Palantir first. Palantir's coming down to a spot down in here under $20. I like it as a longer term hold. I know a lot of people who also do. I could see Palantir being a 50 plus $100 stock in 5 years easily. We shall see. We shall see though. But they got some time on their hands to work things out and get to that point, right, where they deserve that valuation. We're down here under $20. $17 is your support. Below that, I think down towards $14.50. But I kind of like it under $20 just to start picking something up and kind of stashing it away. It wouldn't be a terrible IRA idea, I think. But may not, if the market may not be like bottomed out totally on these things. I think we have another a couple weeks of that. DPW, I believe they're changing their name, or they split themselves up, I think. So like you're gonna have, I believe, one company or like a shell. I forget exactly how they're gonna do it. I haven't looked into it too deep, but I believe they're changing their name to something, and then they are gonna have one business or one company is just gonna be like the crypto mining, and then one company is gonna be whatever else they do, and like essentially they're trading. Like the CEO has been trading penny stocks with like company funds, I guess, or whatever, like with company money. I don't know, under the DPW like company, I guess, umbrella. And I will say the one thing that, obviously, he's been buying stuff that's gotten beaten down, market's been beaten down. He's wiping away money because all these stocks keep going lower. Now that could change quickly, but when you're talking about millions of dollars and you're buying these like penny stocks and you're paying millions of dollars, you're talking millions of dollars of a position, and then things keep going down, that's not going to look good on the balance sheet, right? Obviously. And so it's going to look on the earnings, and it didn't look good in last earnings. So that hit 140. This could keep going lower. It's a low float though. So I don't know. I don't know. I'm not sure exactly how they're working things out with splitting into two companies personally. So I'm staying away for now, but it's something I always watch. The inside the company CEO keeps buying this thing though. So that's like, we can pull that up. CEO is buying this thing. Like it's literally like he can't get enough. So here it is. Milton right here. Take a look. Buying 174, 167, 150. This is insider director sold some. But he's been buying the greens, all him. He's been buying. He's got 7.9 million shares. Yeah, he's got a lot. He's got a lot of money tied up in this thing. So he's buying. Does that mean, again, does that mean like that's insane? I mean, he's bought a lot lately. Looks like right here, he increased his stake by 50%, a $3 million buy or something like that. Yeah, $3 million plus buy, $3.6 million buy back in, looks like that was September. Now he's down on that, or is he now? He's barely down. It's 240. No, he's down 240. Yeah, we hit 140. Sorry. Yeah, he's down big on that. But again, right, if this thing bounces back and spikes up into the 3s or 4s at some point in the next year, he offloads all those shares and he makes millions of dollars or hundreds of thousands of dollars, right? Whatever it is. So, that's kind of the nature of some of these things. If you're patient, you kind of know how these things kind of go. Obviously, the biggest threat for them to keep going down is markets conditions are horrible, which is kind of what we're seeing right now. And does that keep up? Maybe for a couple of weeks, months. I don't know how long that keeps up, But also, the company's trajectory, right? If you're talking about a company that is literally going to go bankrupt, then yeah, this is a huge risk. But if you're talking about a company that is fundamentally on the ups by past earnings report, that's where you kind of differentiate between the trash and the safer small caps or the safer penny stocks that have a higher chance for a spike or a bounce when people come over to them and it's like, oh, hey, wait, why haven't I looked at this stock? And all of a sudden, wait a second. And everyone's buying the thing up, 20% off of lows when you could have bought this thing the entire time, for way cheaper. It's kind of what you'll see all the time. Chasers got to chase. That's that. Let's see. Let's take a look at Amazon. Amazon has been consolidating. Let's pull up the weekly on Amazon, but it's been looking nice though. I mean, like honestly, just, buying this thing down towards the lower end of the range, and this has been beautiful until it's not, right? Until it's not, but Amazon is kind of got to get it back up into this 37. I mean, personally, right, we're towards the bottom of the range. Let's see if we can draw a channel. Trend channel. Let's see what we can do here. Roughly, there you kind of go. So you're kind of towards the middle bottom of the channel, up into the 3,700s where I look to sell, or like that's like the breakout point, on Amazon. Similar chart, not exactly. Apple had a much wider range, but similar though on Apple. Look at this, similar setup. And Apple's blowing out to the all-time highs, so could be looking at something similar on Amazon at some point soon. How much money to make off the crash? I don't know if I can necessarily say it. I don't even know. I would say that I don't remember my account getting hit that hard, to be honest, during the crash. But then again, I didn't have that much at the time in the account. But I remember back then, there were some crazy, like the money that I started making more and more like right after that, when everything started to really go crazy. And then it was like the COVID plays, then it was like the EVs, and then it was this and the clean energy. And then it was like just one after another, sector by sector, as things were going. Then eventually the weed plays, it was like nonstop. Be fun to get back into a market like that again, but I don't know if that's necessarily going to happen. I think we're going to get back to kind of just, things pre-pandemic and taking it easy and wiping a lot of people out, which we've seen. And then I think it's going to be kind of easier to understand patterns and stuff, which I think we're getting closer to a point where we can start to identify patterns and start to see things a little bit better. You just kind of had a crazy wild downswing, right? Pandemic, wild upswing next year and a half, and then a wild downswing in small caps, but upswing in the overall market the next like 6 months. So you kind of see that it's like things are like all over the place until things kind of start to solidify themselves and make more sense. Not making sense. They kind of make sense, but things start to solidify themselves and we start seeing more patterns, repeat. Then it becomes a little bit easier to kind of go heavier into certain things. So I don't know. That's probably like the strongest part of the time. I mean, I probably only had, I don't know how much the account was worth then, but I've since built out a couple accounts. I actually been messing around lately on my Robinhood account. I've been playing with like more options like here and there. So that one's been I actually had a nice one this past week, a nice percent. And the account was up like, I don't know, 25%, which is great, but it's also a pretty small account, but I've been kind of messing around with that stuff. I have some, bunch of crypto accounts. That said, I want to pull off Bitcoin. Talking about crypto, I want to pull off Bitcoin. All right, so Bitcoin had a pullback last week. Let's go to the daily chart here. Pullback last week pretty hard. I had this last weekend down to 42, and then it bounced and looked like it was fading off towards like Thursday, Friday, and then it bounced back up. So you're kind of in this range. Under 53.5 is kind of my level here. So if Bitcoin gets up over 54K again, good sign. I think we're back up. We have a very good shot to all-time highs again. But if it can't and get rejected there, we could be looking at a potential head and shoulders pattern here. I mean, look at this. So you kind of have, here's your shoulder. Now, we haven't developed the second shoulder yet, so we'll see. But if Bitcoin gets up and gets stuffed at like 53, 54 and starts to fall back off the downside down to the lower 40s again, then you got the pattern. So here's the first shoulder, here's your head, and then here could be the next shoulder on a broader scale. Look at the chart here. So we could be looking at something like that, and then that would generally, that head and shoulders pattern is a bearish pattern for a more downside move. So we'll see if that's what we get, but that's on the daily chart. If we look at the weekly chart, kind of the same thing on the weekly chart. Here's your shoulder, here's your head, and boom. And then you can also see this, there's inside of that, you can even look at this saying, well, there's an inverse head and shoulders on this time frame. Yeah, I mean, there are, sure. But I'm just looking at the bigger picture on this thing. So over 54 is kind of the key. With that said, then you're going to be looking at your Maras and Riots again. We'll have to watch those. The trend has been decent, though, on this. I mean, I will say, overall kind of bottom trend here on Mara, we're down towards it. So if Mara starts to crack down below, let's say, looks like below 36, I would get worried under the 200 SMA here, and it starts to hold under that. I may look to take a short position on that. Obviously watching Bitcoin, but look at that for like a pretty big pullback where this thing may crack down. Bitcoin looks weak. Mara could be back in the 20s pretty fast. I think it's certainly one of those stocks that we could see a lot more downside. I wanted to play a short up in here, but I was thinking to myself, not up in here. I was looking for a short into 2022, but I was expecting a bigger ramp in Bitcoin into the end of the year and then play the backside next year. Didn't really get that opportunity. It seems like when I thought about playing that, that's when the backside began. But, it is what it is. So let's see how ETH is doing, by the way, on top of that. Webull, by the way, has like a lot more cryptos available now where that came from. So they got a ton of coins available. But that's this platform that we're using, by the way. So holding up a lot better, I think, ETH-wise, right? Holding up here around 4,000. If it can hold 4,000, great. If not, 3,600 is kind of my next level to watch. A lot stronger. So if we do see Bitcoin bouncing back, this is probably going to go to 5K plus pretty fast. If Bitcoin starts making a run back up towards that 54 to 55 plus range, then we should be looking good there. So we'll see. MRAI looking good for next week. Let's take a look. MRAI. If it can hold up, it's trying to hold up here, right? It's trying to hold up in the dip down about $4, and now it's at 450. So if it can hold $4, it looks like it's setting up for a little potential little move. Kind of your cup and handle. This is like your little cup right here, and then you kind of have your handle developing right after your cup was formed. That's generally a bullish pattern where you see a little cup develop on the chart, hits a point, pulls back a little bit, develops that handle where you can hold that cup, and then boom. That's what then maybe not to that extent, but who knows? But that's just kind of the pattern that you want to see for a bullish move. So we'll see if it can hold here and it starts curling. It looks pretty good. Building higher lows. We shall see. Let's see. I personally don't use FanDuel anymore. Actually, I use Bovada for some sports betting, but I don't really mess too much. Maybe I'll take something here and there, but like I rarely do that stuff anymore. I don't want to say put me in a bad place. It's probably got me into a lot of things that I do today, but it was a really rocky period of time back in like sophomore year of college. I was like deep into the sports betting space, and it was not fun. I mean, I had some crazy runs, and I had some massive losses. It was like you have a couple great streaks. I would have streaks of time where I was like, oh my, like I'm doing so well, and then I would literally just do something stupid and lose it all, like literally everything. Back to being an idiot back in school, right? Nvos. Nvos, I'm gonna wrap things up here in a second here too, because we've been going for about an hour, but like a little over an hour I think now. Nvos, we should be getting the 10K file this week, so we should see their earnings. The reason why they were delayed, the filing was delayed on Nvos, was because they have had significant changes in their reporting or their financials or whatever this past year. Or recently, and so they have to get everything audited and checked through. So that's fine. They acquired like 7 pharmacies. So I'm kind of like, the downside of this is like kind of minimal in my eyes. I mean, of course, there's always risk, but this I see as like almost like a really nice upside potential play, because if things get picked up, or if all of a sudden they drop this report and it's like, wait a second, this company is pulling in how much revenue or how much profit? I don't know if they're pulling profit. I'm saying how much revenue, and their market cap is 37 million. How much cash they got? The market cap is 37 million. What? And all of a sudden, boom, the thing can be, the thing can go. So we'll see. That's what I am watching. That said, let's take a look at futures really quick. What do we got? They're up even more. Look at small caps. So we're going to all-time highs tomorrow. It's like small caps. I could have even played. I had SPY calls in my hand, and I made like 20% on them at the end of the day on Friday. I was like, yeah, I'm gonna take profits. I'm not gonna hold over the weekend. I could have held some. It is what it is. But small caps up 0.75%. VIX is pulling down hard again. Nasdaq up 0.4. S&P up 0.4. Dow 0.43. I mean, looks pretty good. So market looks green tomorrow. I would expect to break out all-time highs, and then maybe, again, same thing I think this week as kind of last week. First 2 days, bigger moves. Then I think Powell speaks on Wednesday. That's where we could see either a pullback or just everything kind of sits flat and nothing happens and things kind of fade back off. Premium decay, time decay, so be careful of that. If you're playing options that expire this week and you get big moves early, take profits or cut things fairly fast, because things may just sit. And that's where you can look to play other types of option strategies and whatnot, which if you guys don't know, the link, there should be a link down below to the TC trading channel. I post like at least once a week there, and it's like all like tutorial stuff. So we talked about like almost like every option trading strategy that you can utilize on Webull. We talked about like all of them. So there's a lot of strategies that you can play that if you're not expecting a big move up or down, you can play these different strategies. And if the stock doesn't really move, you make money. So there's tons of ways to make money when that happens too, after big moves up or down to start the week. So take advantage of that. Check it out. Also, there's just free videos if you want to check them out. Subscribe there. Subscribe here. And we'll see you guys in a future video. Hope everyone does well this week. We'll see what happens.